With an estimated 270 billion barrels proven reserves and an average daily production exceeding 11 million barrels per day, Saudi Arabia has succeeded in establishing itself as a major influencer in terms of oil production and prices. In 1960, it was one of the 5 founding members of OPEC, and by far the most important. In 1973, the Saudi government bought a 25% stake in what was then the Saudi Arabian Oil Company, or Aramco, which had increased to 60% a year later, taking 100% control in 1980. Saudi Aramco is arguably the wealthiest company in the world. Through many decades, Saudi Arabia used its wealth and power to influence prices. The best example is certainly the 1973 oil crisis, when OPEC proclaimed an oil embargo which quadrupled oil prices globally. In November 2014, Saudi Arabia took a strategic turn, allowing an oversupplied oil market to balance on its own rather than coordinating with other OPEC members. The policy was mainly designed to target high-cost producers, such as those in the US shale belt. This soon backfired, as a drop in oil prices weakened Saudi finances. Over the last 2 years, its foreign exchange reserves have fallen 20%. Unsurprisingly, the December OPEC decision to trim output was mainly driven by the Saudis in an attempt to rebuild their economy. In another strategic shift, last October, Saudi Arabia successfully sold a record $17.5 billion of debt, the largest ever emerging market bond sale on record, in an attempt to reduce its oil dependence and head towards a more diversified economy. The success of the bond sale may also be a good omen for the future Saudi Aramco initial public offering. According to Bloomberg, this IPO could raise $100 billion with the sale of a 5% stake. Saudi Aramco, which now accounts for 45% of Saudi Arabia GDP, 90% of its export revenue, and 80% of its budget revenue, could be the key to improve corporate transparency in the kingdom, draw additional foreign money into other Riyadh-listed stocks, and enhance the country's global position.